Hello, I'm John Kicklighter, Global Head of Content at StoneX, here with a short and hopefully useful video on time frame analysis for traders. When someone gets into the markets, it's often due to inspiration from an analyst or another trader, and obviously the desire to participate in that market. Now, that inspiration will often come with a strategy that they would like to mirror, and inherent to that strategy is a expectation of time frame. Now, individuals have their own risk profile and their expectations of how long they want to be in and out of the market, with the turnaround either from the short time frame from scalping all the way up to long-term holding periods that include investing. But determining what kind of approach you are taking is incredibly important because it will dictate our strategy and how we approach the markets. For example, this is a 60-minute chart of the S&P 500 E-mini futures contract, and as you can see, we go through multiple daily sessions over this time frame, where it goes from quiet in the after hours to very active, especially during the release of U.S. event risk concentrated around the U.S. Open. And if we were not appreciative of this, we probably would miss a lot of this volatility on and volatility off. This also would suggest to us we have a shorter time frame. We should concentrate more on scheduled event risk, and technicals is very important on this time frame. If we go up an order, we have something like the 4-hour chart. This is in the swing territory, where yes, we still need to be mindful of what's on the event risk calendar, but we're also much more interested in the trends, the fundamental themes that event risk will feed into. And as you can see, our holding period will be a little bit longer by virtue of the time frame that we are approaching these markets. And then if we take it even further up to the daily chart, our time frames go up much higher. Event risk is somewhat lost on this time frame. So while we pay attention to the calendar, it's much more in the context of whether it can generate bigger movement on larger themes and dictate the trends therefore. So keep mind of how important the time frame analysis is in your approach, and match what time frame suits your trading approach. Good luck trading out there. Hopefully this was useful.